All right. Well, I got you here.
I'm here. I tried to bob and weave out, but I'm here.
You did. You asked a bunch of questions. How does this work? I was like, just come talk to me.
let's just pretend we're at Mockingbird and Irving Boulevard.
That's
and
right.
Just talking outside of a leasing door.
That's right.
Let's do
So
that.
that's. I mean, golly, we probably started about the same time.
Yeah.
Careers, you know. But well, anyways, Todd Marchesani, everybody.
Thank you.
Box Investment Group partner.
Appreciate it. Appreciate it.
No. Yeah, man, we started on them streets. I was always so excited because you had the nicest buildings in Brook Hollow.
We spent a lot of money on some Brook Hollow buildings.
They were great, though. God, I wish
sure.
when they sold, I wish I could have bought them. I was like, God, these are just, and they were in, great 15, 10s.
Yep.
All those just great little tenant sizes of buildings. And, yeah, no, it was, you were at, so everybody knows you were at Sealy.
That was it. Yeah, I was at Sealy at the time. We were doing in-house leasing, through the downturn, and that was a great opportunity to just, take that CalSTRS portfolio in-house. And so we had the Brook Hollow, Quebec, Lackawanna, Mockingbird, and then Miller Road, Miller and Jupiter Business Center. We had the project in Addison Metro. So that was kind of my foray into on the ground leasing experience, meeting with, brokers like yourselves. I mean, you guys make the world go round in this industry. And for me, that was a huge opportunity. So,
yeah, no, I would say probably a big part of doing the leasing side is probably translated into a lot of your success.
For sure.
On the development side now.
100%. And the ability to call on broker relationships that, we did deals with in Brook Hollow. I mean, those are just, those are core memories, honestly.
Yeah.
I mean, I remember the deal we did. It was a generator company. It was about 16,000 square feet.
Yep.
We really needed some dock door count. I think we had 4 or 5 dock doors on 16,000 square feet. That was a big number. And yeah, so, for me, it's leveraging all those relationships. Obviously, we know that this business is all about relationships. And I think the more time you have to put in and create and develop and, grow those relationships, the better. And kind of here we are with Box Investment Group.
Yeah. You know where I pulled that group out of?
Where?
Y'all's Forney Park.
Oh, really?
Yeah.
I didn't
Forney?
know. Forney. Yeah. Sealy had the metal buildings. They still do on the metal buildings there. I mean, it's just a cash cow. It's a great project. It's
like my Seagoville project.
Yep.
I was like, when I got that, I was like, I'm going to own a project like Sealy owns in Forney. And it's like, it's just a slot machine, man.
It's awesome.
Yeah.
Yeah. They've done a great job with that.
Those guys called me. I was like, where are you at? I'll come to your office and meet with you. Like, we're in Forney. I was like, golly. Okay. So drive out to Forney and met with them and we tenant repped them. And, it's, but, what was great was like, I always knew like, when you're a broker in a submarket, you kind of know, hey, there's certain guys I can just go to and I can make a deal. Like, totally. I know I can make a deal with this guy. I had a furniture guy in one of y'all's places and just a generator guy, it's always good to work with a great leasing agent that you can become friends with.
Yep.
With a good landlord paired with that, because Sealy was always really fair, I felt. And
yes.
And it was very easy for me to set my clients' expectations of how this is going to go.
Yes.
And I guess it could be the opposite too, like Wiley Brothers, every time I took someone to a Wiley Brothers building, I'm like, look, listen, they're going to give you 1 month of free rent. They're not going to negotiate the rate. You'll probably get some paint and carpet. If you can accept that, we can make this deal. Now, they're the cheapest rate in town, probably.
Right. And that's probably half your job is just setting expectations with your client.
Totally. Totally.
And if you don't, then it just makes your job that much more difficult. And our job at the time, leasing. So, but that was the start of our relationship, and it was always great because it's like having an ally, right? It's like, hey, I need to make this. Hey, I can take you to this building. These guys are really good to work with. Yes.
A broker needs those kind of relationships with landlords to make tenant rep deals, because tenants they don't know what they're really getting into, right?
Correct.
And I've always felt the term landlord, tenants feel subservient in a way because of the term lord,
Yep.
Like, but it's not a capital L, it's a lowercase L.
That's interesting. Yeah. I'd never thought about it that way, but yeah, certainly.
And so if I can help ease, if I know a relationship with a landlord, I can help ease that. Be like, hey, look, these guys are good guys. They're reasonable people. Yes, they have a lease document, of course, but they get it. Versus I've had some institutional landlords that have kind of changed their tune on things. And like, when I show options to people, I'm like, these guys, they'll totally screw you.
Yep.
But they have the building you want.
Yep.
So.
Yeah, our business is not overly complicated, and you shouldn't overcomplicate it.
Yeah.
When it comes to leasing and being a landlord, I mean, certainly you have to, protect your investors and protect your interests, but there's also a humane way to do it.
Yeah.
That I think the tenants see. I mean, we've seen that with some of our leasing success at Box and some of the buildings we've sold. I mean, we're still in touch with these buyers. We're still in touch with these landlords. I've got a guy from India that leased some space from us. They're a tier 1 supplier for Peterbilt, and he had his family in town, and he wanted to get us all together. And that's just what we're doing. That's how I operate, and you obviously saw it when we were doing leasing with Sealy.
Yeah.
Mm-hmm.
Well, let's start from the beginning.
Yeah.
Where'd you grow up?
So I was born in Singapore. That's my party trick. Yeah. So lived there for 10 years. My dad worked for Chevron. So we were overseas. We spent a year in Dubai, moved back to Singapore.
What was Dubai like back then?
Honestly, I don't recall a lot.
Remember?
Yeah, it wasn't as westernized as it is today. So I'd love to go back and see it. But we just spent a year there, went back to Singapore, moved back to the States in 93.
Okay.
So for elementary school, I lived in Capel. And then we moved to Houston, which is basically where all the oil families ultimately end up in the States.
Yeah.
So
home base.
Yeah. And, I went to SMU. That was kind of my connection to Dallas, connection to real estate. Obviously, big real estate scene in Dallas. Most of my family all of them are in oil and gas. Did not want to move back to Houston.
Don't blame you.
Personal reasons. But, I love Dallas. I love this city. I love that everyone's here to create opportunity. It's not a small town, it's a big town. You can come in from any part of the country, any part of the world. Everyone wants to, create opportunity and wealth for their family.
Yeah. So why'd you pick SMU?
SMU, so I'm middle child. My brother went to SMU, so did middle child things. And that's where I ended up. Obviously not a bad option. Went to the business school.
Yeah.
Certainly premier education, and glad I did it. Walked away with some great relationships. Probably spent too much time networking, but it's paid off. I mean, a lot of the folks from our class are working at all the brokerage companies, and it's just another layer on top of what we discussed with in-house leasing and Brook Hollow. That additional layer is just having that sort of college connection with people that are now in the same town doing the same type of work.
I think that's a very important thing for people. So first off, my nephew just graduated from SMU.
Okay, yeah.
2 weeks ago.
Okay, cool. Congrats.
And,
that's awesome.
It's funny, Jeff and I were standing there in graduation, and I was looking around the room, there's a lot of well-known people in the room whose children are graduating.
Yes.
I go, Jeff, I think the collective net worth is higher than most countries' GDPs in Moody Coliseum.
Yeah. It's big. It's big.
But, the network side of things, I never really realized how important that was in a college decision until later on in life, right? You don't see that. My college decision was strictly based off sports. I had it was strictly based off also Jeff not allowing me to go to somewhere like Rice where there's really no fun. It's just all work and no real social life or scene or anything. And so that's how I ended out in Lubbock. Looking back now, man, the North Texas network of Texas Tech people's huge. And a lot of them are getting in real estate. So when Tommy was, Jeff's son, was looking at where do I go to school, I said, listen, man, he was on the fringe of being a Division I player or, maybe like an FCS type player or something. And he had some of those smaller schools he could have gone to. I said, listen, something I realized that, walking on and playing, because he walked on at SMU. He played 1 year and then was like, I want to go to school. And I said, if you're at a bigger university and that's where you stay, your network is so deep. And then when he was like, I really think about SMU, I was like, well, you're probably doing commercial real estate with us. You probably couldn't pick a better school in Dallas in a market to do commercial real estate because the network is so deep with that.
Yeah, I always say it was a good blend of academics and social, and you walk out with a fantastic network, certainly a great education, and you just go apply it.
Yeah.
So here we are.
It's very interesting. I was having lunch with a Mercer Company broker yesterday. He just moved here from Baton Rouge. He was a broker there for a while. He goes, I just got accepted to SMU's MBA school, and I'm thinking about doing it. He goes, it's expensive, but I'm just thinking about doing it for the networking. I was like, I don't hate that idea. Like, you don't need an MBA for what you're doing, but if you had it, yeah, you'd meet some pretty good people. So yeah, I think it's very powerful. It's a hard decision it's a hard thing to see when you're a kid making a decision going to college, but looking back, like, I think those things are really important. So
yeah, I think for me, my parents certainly had a large part in the decision, and I'm glad they did it.
Yeah.
Mom knows best.
Yeah. So you graduate SMU.
Yes.
What do you do first?
I was an intern as a senior at SMU with a guy named Craig Johnson, Malar LP.
Okay.
Craig is a great person. He's still my mentor today, just a selfless individual. He hired me out of school. My brother had graduated during the .com bust. He didn't have a job when he graduated, so he had to move home. So that was sort of the big running joke. Hey, look, if you don't have a job, when you graduate, like, you're moving home.
Yeah.
And so that's the last thing I wanted to do. Fortunately, the internship turned into a job at Malar. And then, again, going back to Craig actually brought me the opportunity at Staubach. So buddy of his was working there. They said, hey, Craig, we're looking for an analyst. Do you mind if we interview Todd? And Craig said, no problem.
Yeah.
So
that's cool.
Interviewed at Staubach. That was in their capital markets group, which was, a startup for them at the time. So was hired, started September 2007, which was when the credit crunch started. Obviously not a good time to be in investment sales. And then September 2008, that's when JLL bought Staubach. So for our division specifically, we were an afterthought. They were buying Staubach for the tenant rep business. Roger and everyone was great with severance. So, that was a good opportunity for me personally. I always say, Roger helped me buy my first house, and so, I had the opportunity to start at Sealy the next day, basically after I left Staubach, and, kind of the rest is history. We battled through the GFC. We brought leasing in-house. That was a great opportunity for me. We talked about that. And then coming out, did acquisitions, and then ultimately was approached by Southern Land Company, which was a multifamily developer. For me, I didn't know kind of in my career if I was going to be a specialist or a generalist. So I looked at the institutional pie and was just saying to myself, okay, well, multifamily is a large percent of allocation. Industrial is also a large percent. At the time, it wasn't as big as multifamily. It's since obviously shifted as industrial has grown. But it was just an opportunity to learn a new product type. It was kind of my foray into development, doing, purely land acquisitions and entitlement work, which I thought was an interesting role. I was always on offense. It was purely going out and sourcing land, getting land zoned, entitled. Once we closed on the asset, I was moving on to the next land site.
Yeah.
So different than, I think, sort of that typical Trammell Crow model where it's cradle to grave, find a site, skin it, take it all the way through. It was just sort of a different approach, which I kind of appreciated, certainly, personally and professionally.
Yeah, no, it's, we're having growing pains like that here, right? Because we're such a small team, we touch everything. But at some point, I like the idea of acquisitions goes and gets it closed, and then this guy steps in and takes it over and is that executioner,
Yeah, and obviously the transition is the art of it, but especially in our world in development, we just find ourselves, if we're not out hunting, if we've got that deal under contract, now we're focused on going to execute. And so you spend more time behind your desk and you're spending less time out in front. And so, obviously the balance needs to be there where you're sort of hunting and executing on what you've got. But it was just interesting to see that different perspective where you were solely focused on hunting all the time, which was cool.
I remember it's funny how you remember certain things, but I remember I was driving like across from South Dallas, the Trinity River, like probably on Mockingbird where it goes across.
Yep.
Right by y'all stuff. About when you called me, you're like, "Hey man, just want to let you know I'm leaving and I'm going to this." And I was like, "Oh, I'm never gonna like talk to you again." Like you're going to like a whole. Sure. I don't even know what that is.
For sure. Like the product types don't mix. I think now they mix a little bit more than they did, but at that time it was so different. You know, industrial or multifamily. Like those were two separate product types. But again, like I just didn't know if I was going to be a specialist or a generalist. Obviously, I figured out that in this business it's better to be a specialist, and that's kind of where I ended up on the operating side. But for that point in time in my life, that was a good move and opportunity just to learn something different.
Man, so I never really worked anywhere, but I learned land entitlement by just buying something and watching my partners that I bought it with do it, because this situation is actually Isabella's uncle is like my best friend since I was like 12, and I was like, he goes, "Hey, we're gonna buy this. We need to buy this 200 acres." And I was like, "Okay, are you buying it?" He's like, "Yeah." I go, "Okay, I'll buy it." And then he's like, "Hey, we need to bring this girl in to help us. She's a civil engineer." And I'm like, I didn't even know all this went on. Like all the things that go on into like getting a piece of dirt to become a vertical piece of real estate. It is wild how much time and just trickery in a way. It's like there's so many other things to think about it. I'm used to just like paint, carpet, fix the fence, type things. But it's been fascinating learning it, and just it's pretty cool. I love learning real estate, so it's been fun doing it. So
yeah, and I never thought I was going to be a developer when I grew up.
Yeah.
And certainly, it's nice when you're doing acquisitions. It's kind of it's quick pace. Development, you've got to have the patience to kind of sit through and work through just everything that comes at you. And it's been interesting to see that this is where I've ended up in my career, and I love it.
Yeah, I was talking with the head of the real estate department at Texas Tech. I said, looking back now, y'all used to have a dual major of finance and accounting. I go, you should have a dual major of like finance and civil engineering.
Right.
Like you'd be lethal if you walked out with those two things. Like it's like the development degree. Like,
yes.
I never even knew what a civil engineer was. I was like, what does that mean? Like,
yeah, and we just hired a development manager who's a civil engineer.
Yeah,
it's exactly it. I mean, they're for industrial development, it's the best execution. Certainly, I can perform those duties, but just to have that additional layer of protection for our capital, just that civil background is huge.
Oh, that's like when Isabella's uncle's like, we need to bring this girl in. She owns a civil engineering firm. And I was like, okay, God, I'm glad we did. She sold everything too. We bought that land when we closed. We 4-way simultaneously closed out of the back 150 acres.
Nice.
She was the broker on all of it. She sold it all to everybody.
Fantastic.
She's like, "Oh, I got all these buyers for this stuff. They're doing project. I'm doing their project over here. I'm doing their project over there. I can sell it to all these people."
Wow.
It was wild. So it's cool starting to learn that side of it. So, but you came back. You came back to the industrial world.
Came back. I did some self-reflection. Just realized I was an industrial guy.
Yeah.
I love the people in industrial. Again, there's nothing too complicated about it. Everyone's here to enjoy what they're doing. Create some opportunity for their families, and nobody takes it too seriously.
Yeah.
It's a box. That's where we came up with Box Investment Group.
Yeah, that's great. But you is that when you went to what was Frontier at the time?
Yeah. So, Holt called. There was some folks I knew over there at Frontier Equity, which is now Holt Lunsford Commercial Investments. And, again, obviously always throughout your career, you're looking for opportunities to grow. That was an opportunity to go from just purely land acquisitions into, a traditional development role, that traditional, Trammell Crow model, which is obviously where Holt started, coming from the Trammell Crow tree. And so that was a great opportunity for me. Prior to starting Box Investment Group, I was at Holt Lunsford Commercial Investments for 4.5 years, before COVID and then coming out of COVID, great opportunities. We did, 14 ground up developments while I was there, went round trip on 10. As you really learn just by repetition.
Yeah.
And so for me, just to have that opportunity to do 14 developments, and for development, it doesn't matter if it's small or big, you're doing the same repetition. And so to be able to do that 14 times in 4.5 years was huge.
Yeah.
And so, we did some great things. I mean, we put some dots on the map and it was a lot of fun.
Yeah. So then what made you say, I'm ready to go do this on my own?
Yeah. So there was a lot of forces there, but, for the most part, it was just me wanting to create a legacy for my family. You kind of see all these great folks that have done it in the real estate business. And I think that's why we're in it, because it's very entrepreneurial. You don't have to have $1 billion to go drill a, oil well.
Yeah.
You could put together a couple bucks and go get some leverage and go buy a building or go develop some land. And so for me, it was a lot of that. I hope that, whether my kids come into the business or not, I at least just want to create a legacy. I want them to feel proud that, their dad, did this, created this opportunity, built some really great industrial buildings in DFW and hopefully, other parts in the country over time. But that was really the deciding factor.
Yeah. So when did you start Box? What was the official start date?
Yeah. So March of 2022, right before Russia invaded Ukraine, right before the first rate hike was when we started Box Investment Group.
Isn't that how it always happens? I think Jeff started Mercer Company in like 2008.
Yep. Yeah. And there's never a good time. I'm the personality that would look for the perfect time. Mm-hmm. And I recognize what was occurring. We know that when the market's hot, red hot, a lot of folks either are shifting brokerage companies or, they want to plant a flag. And I knew what was happening, and I knew that was exactly what was occurring, and I did it.
Yeah.
So it ultimately, on a look back, it was a great time. When you're in it, you're like, oof,
yeah,
okay, here we go. But that's our business. I say this a lot. I don't think we're ever going to see these long sort of 10-year cycles. I think the cycles now are going to be choppier. They're 2 to 4 years.
Do you think that because information is like so much more real time?
Yes.
Like
information's real time. We've just got new things flying at us. We've got geopolitical risk. We've got, internal risk within our own country, politics. It's just, you've got to be comfortable being uncomfortable.
Yeah.
And so again, I would have loved to have started at a perfect time. I didn't, but it's obviously, created a lot of opportunity for us. And on a look back, it was a great time to start.
Yeah. What'd your wife think about it when you were like, hey, we'll go do this?
She was good with it. Her father was an entrepreneur, so it was kind of in her blood. It was ups and downs for her growing up, but I think she trusted kind of my conservative approach. Certainly for me, I had to have a lot of savings in order to go do this. They always say have 2 years worth of savings.
Yeah, because you're not really seeing any money.
Exactly. Yeah, especially on the development side. Like it's not coming in until obviously you're up and leased and you have that first sale event. But no, she was in support. Awesome. She was behind what I was doing. She knew that I wasn't going to make a irrational move. I had thought through it. We are fortunate throughout our career that we're paid to learn, and eventually we get to the point where, hey, now's your time to go apply what you've learned and hopefully again create a legacy for yourself and your family.
Yeah. Did you have a piece of dirt already kind of honed in on, or
did not? No.
So.
But my first call was Adam Graham.
Yeah.
I mean, even when I was at Holt, he sold us some land. We've, again, going back to kind of the leasing days, I mean, we were on the streets together as well, in Brook Hollow.
Absolutely.
I can't recall if we did a lease deal together there at Quebec, Lackawanna. I think we did. We did with Able Movers on the backside of Lackawanna. That was about 20,000 square feet, but he was my first call. We we put our first site under contract in Denton off of 380 and Mosh Branch. I remember I wrote a check from my Bank of America checking account that said, POD, my wife's name. It's just it felt very rookie, but that's kind of the interesting thing about development. You're dealing with local landowners that really, they're not digging into your financial backing. They're not trying to compare you against, 10 other institutional buyers that have the capital lined up. I didn't meet the guy. We just made a representation that we can go develop. And, I think the land had been there a bit. I think, one thing that's, I feel like I've been ahead is kind of land values. Early on at Holt, we were paying some bigger numbers for some great infill dirt. For that Denton site, it fronted 380. So it was a little bit pricier. The corner lot was allocated for, gas station type pricing. It was all zoned industrial. So your corner lot that fronted 380 was $17 a foot. And then your lots behind it, again, that were zoned industrial, but more for industrial purpose, were priced at like $6 or $6.50 a foot, which was kind of where some smaller industrial sites were being priced. But blended, we were, a little over $8 a foot, which was more than what industrial dirt was trading for in Denton specifically. But I just knew the market was going to get there.
Yeah.
And sure enough, it did. And of course, on a look back, we've all been, I think, blessed to say that, that was a great price.
Yeah.
As obviously land prices have continued to escalate.
It's cool about, you talk about, starting box to create a legacy.
Yep.
I've taken pictures of that, send them to you.
Yeah.
Because it's on my way to the ranch.
Mm-hmm.
And I'm like, so every time I drive by it, I'm like, oh, there's Todd.
Super cool. Super cool.
And it's like, oh, he's got a tenant. Sherwin-Williams just moved in.
Exactly.
Right.
Yeah. You fall back on good real estate,
Yeah.
So going back to kind of when we started, obviously, uncertain times, we closed on that land site after the 7th rate hike.
Mm-hmm.
But at the end of the day, you're just looking for good real estate, and it's going to work itself out.
How much did you end up developing there total?
So that was 156,000 square feet.
Over how many buildings?
That was 4 buildings, a 20,000 square foot building that was grade level, a 40, a 43, and a 51 that were all dock high.
Did you sell them individually, or are you still own them all? Or
we still own them all. We did not sell them. We separately platted them. So that was kind of part of the going in strategy. Again, you're operating in a market that's uncertain, so you want to have maximum flexibility. So for me, that was the ability to lease it. That was the ability to sell it altogether, or that was the ability to sell it individually to users. So if no leasing showed up, I felt like we could always execute on selling those small buildings to users.
Yep.
It turns out leasing showed up. One of the deals we did do was a tenant in the 51,000 square foot building. We offered them a purchase option. So again, flexibility is key in my opinion. That tenant is going to exercise that purchase option and buy that building. That was the most northern building at the project. We still maintain 3 other buildings that are together and feel really good and still complete a business park. But it's just an opportunity it was an opportunity to get that lease done, and now an opportunity to create some proceeds.
Did you? Are you fully leased up now?
Yes. Yeah. So we were 67% pre-leased.
Oh, wow.
So Denton,
Job, Adam.
Yeah. Denton for the smaller base stuff has been lights out. Yep. We were 67% pre-leased. I think a lot of that is a function of just kind of how we hustle. I like to, I don't know if my leasing brokers like it, but I like to show up to as many tours as I can. I like to be engaged as quickly as possible with tenants. And to me, that's the quickest way to a deal and a commission.
That's the old leasing broker in you.
That's it.
Yeah.
Let's go.
Well, so like what I said earlier in the beginning,
yeah,
all those leasing reps probably make you a very good executioner on getting your buildings leased up now.
Yes.
Because you know how to negotiate a lease and LOI and just get to the point.
For sure. Get to the point. We're building shell buildings. We've got, a TI package. I think everything's in this market is pretty dialed in. The information's flowing. And we all generally know what base underwriting, lease rates and TIs are, assuming the tenant doesn't want to overcomplicate and the broker doesn't want to overcomplicate. we can get to a transaction, a deal pretty quick.
Yeah.
Yeah.
So I think something that might have helped you too is just, a lot of developers won't develop a 40. Right. They want to develop a 400.
Yep.
And that's what a lot of people developed in Denton, and a lot of those are still hanging out there. Yeah. But you had a product type that served a need. Those things are, there's how many of the big boxes are laying around right now? Like
there's a bit. I think obviously don't track it. It doesn't apply to what we're doing, but it seems like there's a lot.
So do you think, just conceptually, question, do you think some of those developers that built all those big boxes are, you went into your development with flexibility, separately
Correct.
platting it.
Yes.
You're also selling the value out of separately platted to a single buyer down the road, right?
Yes.
They could take that opportunity
100%.
and go sell it. But do you think some of these developers that are holding on to these buildings right now, do you think they are like, okay, maybe we need to use or sell these things and just get out? So
yeah, I think you're seeing, some groups pivot or look for ways to separately plat. Mm-hmm. It's obviously easier and less expensive on the front end. We did have to spend a little bit more money, but I assume there's ways, if you've got the street frontage, to go separately plat your building and try to create some opportunity for the JV and sell to a user.
Yeah, no, that's what we have a project in Buda and a project in Oklahoma City. The Oklahoma City project's 4 buildings. I'm under contract on 2 of them to sell them, but I bought it as all separately platted. So like really easy, extra business plan, deal point, that's executing. Our Buda business park like was working out perfectly with that plan because they're all these 6,000 foot separately platted buildings. I mean, anybody wants to buy a building in Austin, like you can't buy one. Well, we got like 8 of them. We'll sell them off. So it's a great strategy. And what is it?
And you obviously have that perspective again, just being on the leasing side.
Yeah.
For yourself. I mean, you know what the tenants want.
Yeah.
And again, you want flexibility. So
right. Yeah. Like some guys just want to own, right? And it's like, hey, well, if you want to own it, here it is. And I'd rather do that than take a lease on this one. And so. It's the buy the pound, sell the ounce strategy,
Yep.
in real estate drug dealing 101. So, something else I thought is really interesting that you've done is I figured every infill site was gone, but you found them. You have found some really good infill sites, like your Irving site, like so
yeah. I mean, you got to turn over rocks.
Yeah.
Yeah. So we do that. We the Irving site was an old parking lot. That was a great opportunity that Riley Maxwell brought us at Transwestern.
Yeah.
I hadn't met Riley. What's interesting there is, Riley's not new, but he's sort of the next up and comer in this business. And there was a lot of folks just going back to, when I left Sealy in 2013, to when I started Box, there's a ton of new brokers that have come into the market that, for many reasons, including, just being on different product type side, multifamily, just didn't get an opportunity to meet. And, Riley was one of those. I'm glad I met him now.
Yeah.
But if there's any brokers out there that came in the business from 2013 to 22, reach out. I want to meet you.
Yeah.
That's important to me. I think it's always important to get back and meet some of the younger brokers that are now the ones that are knocking on doors and kicking up unique opportunities. So,
yeah, Riley, I got to know Riley last year pretty good. He, I've always known John Brewer for a long time.
Legend.
John, drug Jeff over to Robert Lynn and got him going there. And so John's always been a friend. And but Riley, he brought us a tenant on an asset we bought in Fort Worth, and it's a great outcome.
Yeah.
Good deal. So I got to know Riley real well.
I remember that deal. Yeah, that looked like an awesome execution.
Yeah, that was. It was kind of like I'm sad I hate to see you leave, but I'm glad to see you go. And but like, man, it was like that's one of those buildings I wanted to hold forever. But it was like we got an offer, and I was like, probably my capital partner was like, well, our JV says you don't have to do anything in the first year. But it looked really good if you did this.
Yeah.
I was like, okay, I think we're gonna do this. So
yeah, and on that Irving deal, that was another one where we knew where the puck was going, and we knew what levers to pull. I always tell this joke that we had a construction manager at Holt that always told me I couldn't build a building on a spreadsheet. And I'd push this button, push that button.
Yeah.
Say, well, watch me. You know? So that was that scenario. Rents were moving, costs were relatively stable, I believe, at that time. Maybe moving a little bit, but it was a function of just getting in the spreadsheet and kind of understanding what needed to change.
Yeah. What are you looking at any like obsolete office sites? Do you think those are a real opportunity to potentially dust them? And
we are. I still think some of the values are still a little bit high to make it make sense, but I think in some scenarios you can get a realistic seller. In other scenarios, we're probably not a player, but you probably in those scenarios need to push a little bit.
Yeah.
And those just aren't our deals. But yeah, it seems like that's the way kind of Irving's going.
Yeah.
That freeway zoning allows for warehouse, and you're seeing a lot of that turnover. So
yeah, that's what I had.
It's one way to get office inventory out.
The church I grew up in is on the freeway there in Irving, and it's at that Christ Church site.
Oh, yes, yes.
Some guy was
great
like,
site.
Hey, we want to develop warehouses there. I was like, I don't think you're gonna be able to pencil this.
Yeah, they're big numbers because obviously there's not so much value for that office building, but still, there's value built in that you got to work through.
Yeah. No. So what's your role in Box? Are you're cradle to grave now on everything pretty much? Like, are you, you're out hunting sites, you're getting plans done, all the things? And
yeah. Cradle to grave. As I mentioned, we hired a civil engineer to be our development manager. So that's going to relieve me to go do more hunting.
Yeah.
Is kind of the goal. We're really kind of setting up for, when the capital markets get back to where they need to get. And, obviously the leasing demand has been spectacular. And, but hopefully 2026 is the year for commercial real estate. And we want to be ready for it. I think what I never want to do is a reactionary hire. So I want to be ahead and get that training going now when maybe things aren't as fast. And then, once things, get blowing and going again from the capital markets side, I want to be ready.
Yeah.
So
how much footage have you developed so far?
Yeah. So, we're aggregating development sites. I think we've developed since 2022, 680,000 square feet.
Wow.
Just in an aggregation strategy, similar to what folks are doing on the acquisition side. We're just applying that same fundamental and concept to the development side, which is what I was doing at Holt, So we're just applying it again and getting to some portfolio scale. And we end up with, it's a lot of work to do it, but we end up with a phenomenal portfolio that we can either lease or sell to users or package up, in a portfolio and sell to, an investor.
Yeah. What, all in DFW?
For now, all in DFW. Yeah, I've kind of said, there's enough risk in development. There's enough risk in this market. There's enough risk in Dallas. That's about all the risk I can handle.
Yeah.
And certainly the risk of, starting Box. For now, we're just all DFW focused. In the future, maybe it's another market, likely in Texas. So.
Yeah. So have you thought about that? Like what market it would be?
Yeah, not critically, but just sort of emotionally, I would say Houston would be one, just based on my family being there. It'd be pretty easy to kind of plug in and just ask about some of the nuances of the different pockets of Houston. I think a lot of our businesses, nuance of different submarkets, pockets, roads, streets, neighborhoods. Like I want to know all that before we jump in. And so Houston, I feel like I could pick that up pretty quick. Austin, less familiar. San Antonio, less familiar. And then, Nashville is interesting. I think there's high barriers to entry there. My wife's from Nashville. I could plug in there kind of on a local level again, going back to some of the multifamily roots, Southern Land Companies based in Nashville could kind of tap into that network and leverage some of their land acquisition guys that just really get in touch with the right land brokers. But aside from that, all emotionally based, nothing data driven, just those are some of the markets that we've talked about.
Yeah, every time we look at a market, we're like, do we want to go hang out there? Like
Yes.
if we had to hang out there,
Yes.
we'd hang out there. So Nashville's actually on our radar because we have there's an LP of mine that's a young dude. He's syndicated some of his own deals and put in with us, and he's done really well in life and hit some big licks on some stuff. And he's like, hey man, me and my family decided to move to Nashville, and
Great.
So we went out there in February and started interviewing brokers.
Really?
And just kind of get the lay of the land. Yeah. And I really got the sense that Nashville, you better live there if you want to be successful.
Totally.
You better have someone there.
Yeah.
Because
it's definitely smaller market. Good old boy. I don't know, but you want to be sort of locally. 615 would be good to have on your cell phone number. My wife's got her 615 number. So yeah, I agree with you.
I couldn't tell if it was. I think it was kind of more of like it's been institutionally touched now. So you have all these guys that fly in.
Yes.
We have all this money.
Yes.
We want to buy buildings. And then they don't show up for another 3 months. And they're like, remember me? And it's like, no. Like, So I think a guy that's plugged into the community that's the only reason I'm taking the bet on it. I was like, I'm not going to get on a plane and go there every 2 weeks.
Yeah, you're totally right. And that's why, between Houston and Nashville, it's like there's family there, there's friends there. You can kind of feel comfortable and have the ability to go in and, stay a week and really entrench yourself in the market versus, the fly in, fly out, which you can do, but you've got to commit to it and, do it weekly or monthly or biweekly.
Well, that's how we've gotten into San Antonio.
Yeah.
Like, I mean, for the last couple of years, someone from our team has been in San Antonio every other week.
That's awesome.
And so, now I think we see a good bit of San Antonio.
That's amazing.
Pretty quickly from the brokerage community down there.
I love that.
So, yeah.
And are you doing Southwest? Are you driving or Vaughn Lane? Or what's your...
Well, we fly sometimes, but, I don't know if I've had a driver for like 10 years.
Yep,
so
that's right. I remember that.
So that's our Vaughn Lane.
That's awesome.
So, it's really, you work the whole time in the back. You look up and I'm like, oh man, I'm here.
Amazing.
So there's definitely a component to just, the thesis was we could get in the truck and be there in 3 to 4 hours.
Yes.
Right. So those are the markets we like to work.
Yes.
It's I-35 based, but it's also based on, hey, if something's needs to be touched pretty quick, how fast can we get there?
Right.
So we don't necessarily have to have a team in San Antonio. We make a couple more acquisitions. We might have to have a body down there, but, I'm trying to think through that too, because I'm like, I don't know if I want a guy siloed out in, an island like that, because then you lose team cohesiveness and stuff like that. So, my buddy in Nashville, like he's moving there. So it's like, okay, well, you asked, we talked about this because this was already happening. So, but that's the challenge, I think, is you start growing these companies like this and these acquisitions or development sides, it's like we were talking in the beginning, it's like, I've got, cradle to grave. Like when we started, like the first $35 million worth of buildings we bought was me and Isabella, like front to back, like signing operating agreements, raising money, doing inspections, leasing the building, doing the construction, so it's funny. We have a building under contract right now that is it's an AT&T service center, which our first building Matador ever did was an AT&T service center.
Metal?
Well, it's a little brick 3,000-foot office with a metal canopy.
Oh yeah, love that for the trucks.
Yeah,
fenced.
Yeah, fenced. And so
those are some of the best real estate.
We were in a pipeline meeting, and everybody's like, "Man, I don't know if we have time to take this on. I'm busy doing this." I said, "Hey, me and Isabella got this. This is like day one for us."
Yeah,
so,
that's awesome.
So we just been running it, and but we're getting to the point as a company where it's like we've kind of got some different verticals now with our fund and stuff like that, where it's like we got to get, it's an evolution, right?
That's right.
So that's what
and
you're
I feel like
experiencing.
And I feel like if you've got that dedicated person in that market, that works. You just need to give them support.
Yeah.
You know,
that's going to be the next stage. And that's what I was telling him. That's what I was telling him. I was like, hey, like, when you buy one of these things, then like, you can handle it for a while. Then you buy more of them. Then you buy more of them. Then it becomes like, you need support. So how, what does that look like? And
exactly.
So, so I think if you go into another market, I think the goal would be eventually to be, have that look like a home base to everybody, or definitely not just an offshoot, so.
Yeah, we at Southern Land, going back to their kind of how they set up regionally, I thought it was interesting. Again, you had the land acquisitions person, so you had someone on offense all the time. You had the development person, that was the Skinner, and then you had a construction manager, that was managing. So it was a 3-person team, and I mean that's a pretty good setup, for a regional office, and you can go execute with a lot of on a lot of things with 3 people.
Yeah, no, yeah.
Certainly in those 3 disciplines. There's no overlap. Everyone's got their silo and everyone knows kind of what they're doing.
Well, especially when you're capitalized to do it. Yes. That's the challenge of growing these things up. Is I was talking with actually the group that bought the building Riley Maxwell leased for us in Fort Worth. They were in town, and we were all catching up, and I was just telling them, I was like, you really don't make money in this business until you sell stuff, because we just launched a portfolio, and it's like the first one we've ever done.
Congrats.
And
That's
I'm
awesome.
like, it's 10 buildings, about 275,000 feet
Sweet.
stuff, and but iOS driven, so a lot of land with it, and it's I was like, man, I need to get liquid. Like, I was looking at my P&L, and I'm like, the OpCo, these things don't really make money because and then what you don't see is like your OpCo doesn't really make money. Yeah, you probably get an acquisition development fee on your end, things like that. But I was looking at, I run my brokerage commissions through here, and I was looking at what our net profit was on P&L. It was pretty much equal to my brokerage commissions on the top line revenue section.
Yeah.
So I mean, it's like everything's a break even until you sell these things, and that's when you get paid.
Yeah, yeah. We were trained to work for the promote.
Yeah,
you were pushing and you were driving, and you wanted that performance bonus.
Yeah.
So,
so have you ever thought about this? Is the plan to always like aggregate, sell, build again, aggregate, sell, build again? Is there ever a thought to just own for a long time?
Yeah, we've got those opportunities could come about, certainly with the Denton opportunity. Once we sell that building, if they purchase it, great. I think we could go refinance, cash out, and hold long term. That's an opportunity there. So I do think the ability to go sell, a building from a development to go, pay down your basis and repay equity does creates an easier path to the ability to go refinance and hold long term.
Yeah.
You're creating value and obviously going to get refinanced out.
This is something that I've been kind of like mentally struggling with, is like, a lot of our capital, syndicated capital, we're starting to get, we have JVs now with a group that we really like working with. But when it's a promote structure where it's return of capital before you hit promote, I'm incentivized to sell. LPs are probably incentivized to hold, so it kind of creates a little misalignment. So I was like, is there a way to create a run pass option in the operating agreement where it's like, hey, we really like this thing.
Yeah.
Like, we should probably just hold it, and we've hit business plan. Do we convert to this cash flow promote type structure,
Yeah.
So,
I mean, I think on our Denton deal, not to keep talking about it, but it's probably the most real opportunity where we could get into a scenario where we're refinancing, we're pulling all the equity out, we're crystallizing the promote, and we're all staying in together.
Yeah.
So the alignment's there, but I think the alignment is created, one, based on our structure, but two, based on the opportunity of potentially selling, one of the buildings to a user.
Yeah. No, it's like things you don't think about when you start putting these deals together. It's like, you're just like, I got one, let's do it, and
it's hard because, we get, I mean, it's almost like we're a broker shop. Like we're deal driven. We're churning and burning, and if we're not refinancing and holding, I think we're churning and burning forever.
Yeah.
Unless there's another source of income, whether it's a management company or a leasing company, that's a part of the platform. Otherwise, you end up being just a deal shop. And so we struggle with the same thing. It's like, how do you get out of being just a deal shop?
Well, I look at it too, like from my perspective, like let's say I stabilize a deal to an 8, but we crushed it. My promote is equal to a 4x.
Right.
Well, my equity's making 8%.
Yep.
But my true return on equity is like 2%. You know what I mean? So if I sold it, so with what I've really captured in there, so it tells me to sell.
Yeah.
And versus the equity, the LPs are making 8%, which is what they wanted. And so I don't know. It's like just a thing me and Will have talked about and trying to think through, and then we get busy and do something else.
Sure. Yeah. Well, I think fortunately everyone's aligned to obviously create the value and sell and participate in the promote.
At the end of the day, if everybody makes money, no one's mad.
That's right. No, but I get where your question's coming from for sure.
So
for sure.
Well, so how much footage do you have coming out of the ground right now?
So we've got, our Flower Mound project, that's 80,000 square feet. That's pre-leased. That'll deliver at the end of the year. We've got another 80,000 square foot building in Arlington, Upper GSW, 30 and 360. That'll deliver at the end of the year. And then we just closed on a little site in Grapevine. One of the last light industrial zone sites in Grapevine to build a 42. Not a big deal, but that's where I'm comfortable taking risk. We've got a site in Fort Worth under contract, and we've got some other things working. So, our sort of next tranche is going to be, 200,000 to 300,000 square feet. It seems like that's kind of the clip that we're running every, 2 years.
Yeah, that's awesome.
So, which is, a good clip for us, and I think a good clip for the environment we're in.
Yeah.
So,
how many people are on your team now?
There's 3 of us.
3 of us.
Yep.
There you go. And what do you think you grow to?
Good question. I think between the 3 of us, we can do a lot of damage. I could see maybe 3 to 5.
Yeah.
Just depends on how those
it's
sort
all
of
you
separate
need really on that side of the house.
Yeah, just depends on how those separate, markets are staffed and what that might look like. But
are you doing in-house property management?
No.
I'd third party that stuff too.
We third party it. I think that's the new model. You're just trying to stay lean, within the investment professionals, and then third party property management. Certainly there's revenue that can come in from there. I think that revenue comes more when there's scale.
Yeah.
And I just don't think we're going to get there at this point in time. So I'd rather just third party, have less employees to manage, and then just focus on the investment side.
Yeah. I think that's smart.
Yeah.
There's really no money in management until you get to scale, and probably when you have a leasing platform behind it to go get third party. So doing in-house, to me, we kind of made that decision. We in-house certain buildings. We're like, hey, this is pretty easy.
Single tenant.
Sure. We got this. But our parks, we've pushed those off and hired for it. And, but they have a whole third party thing going. They want to do those things. They own those kind of things. So
yeah, it's just stay in your lane.
Yeah.
I was like, I'd rather know what you're good at.
I'd rather be a deal assassin. So that sounds more fun to me.
Way more fun.
Well, what's the most unique deal you've ever pulled off?
Man, we bought a site in Valwood. This was, I don't know, 2019. Yeah. It was again, obviously all these sites, everyone's chased them. Everyone's tried to get them. This was a site that was owned by a older gentleman that had bought it during the RTC days, had owned it forever. I think every time an offer came in on the site, he'd move the puck, and next thing you know, the land value increased 50 cents. And I think it just kept on doing that and doing that and doing that. And, again, going back to the broker relationships, we were working with Tim Beeler on that deal. And Tim had bought a house from this guy. So this guy had a P.O. box. So, I don't know if other brokers had tried to get in touch with them. I don't know, but you certainly know it's a challenge when somebody's got a P.O. box and then you're trying to figure out where they live and some of that background. So, we had submitted a contract to him. Tim had dropped it off at his house. And that was sort of the start of it. The puck moved on us again, and we finally got it corralled. But sort of the unique part about it is, every meeting we had related to contract negotiations, related to title closing, was in person. So he was an attorney. We met him at our attorney's office. He would hand redline the document. Our attorney would take it, go back to his computer, put it in the machine, generate a professional red line or, counter whatever points that he would agree to or not. We'd go back to the guy, he'd red line again, and we sort of did that. And the same thing happened at closing. We were unsure if he would show up at the closing table. Yeah. One of those things. We had done a lot of work on the site, and we met at the title company's office. We signed everything in person, live, and it was, you were, how this business works. I mean, you're holding hands the whole way.
Yeah.
Until that deed gets transferred. I mean, you're holding hands.
Yeah.
And so that was really it. Just, the ability to go corral somebody, do everything in person, just like super old school. It was probably one of the most unique deals we did.
That's the ability to go do that and recognize when that's how the transaction has to go.
Totally. Yes.
Yes. So it's
that sixth sense, that all the brokers have. I mean, you just kind of know it. And I feel like, every successful person in the real estate business has it. It just knowing when you've got to pull that lever or go to that level of detail or execution to go corral something to get it done. If you don't put forth that amount of effort, it's just not going to happen. It wouldn't have happened.
I remember one time me and Boozer were calling on this guy in Turnpike. He was in like 300,000 feet. And this guy had this big old business just sitting there, and we go in his office. He's like, yeah, I'm coming up on my renewal. And I'm looking around his office. It's got like, 8x10 photographs of oil wells around it. And on his desk is a tape calculator and an ashtray and a notepad. That's it. So
awesome.
We're talking to him, and he's like just ripping cigs and writing stuff down and, doing his little calculator. And Boozer goes, well, we'll get you some comps to look at. He goes, that'd be, and then Boozer goes, we'll mail them to you. We will not email them to you. He goes, that'd be good.
Shout out to the U.S. Mail.
Yeah, I walked out there. I was like, this is good context clues there, Boozer.
Definitely. It's so funny.
Yeah, no.
It's funny. Our business is, pretty antiquated when it comes to that kind of stuff.
Yeah.
And
it's slow to change, too.
Slow to change. And so we'll see what technology does to it. I mean, certainly our reliance on, listing platforms is there. And, but I still think we're doing paper, we're doing pens, we're meeting in person, we're shaking hands. And I'm just not sure how that changes.
Well, I think the big change I've seen is like, I remember when I used to go get, leases, 3 leases signed and checks. That's how you know a deal. Now, half the time I get a deal signed and I don't even know if they paid rent yet.
Correct.
I'm like, did someone check the portal? Like if they paid?
Yep, correct.
Whereas normally it's like landlord's not signing until there's a check in his hand.
Yes.
So, but that's different now because you got DocuSign.
Yeah. And you've got text messages. There's no telling what's in my text chain.
Oh, dude.
Hey, I'm sending you this check. Hey, I just signed the lease. Here's the lease. So you're checking your email and you're checking your text, trying to figure out where the document went,
That's what I tell people. I was like, I have like 800 unread text messages.
Yeah.
And they're like, what? I go, well, do you realize when you text me something, you're in there with my kids, my wife, my buddies, like, everybody.
Yes.
Like, you just went into a total different ecosystem that does not work for me.
Yes.
So, but it's just how you got to navigate those things now.
Yep.
So, well, what do you feel like you're, what's your habit or routine that you feel that is kind of that grounds you and kind of has been your success, or helps you be successful?
Yeah, I think the new one for me is just waking up early.
Yeah.
That has not been my history. Definitely not a morning person.
Yeah.
But I love waking up early now. So, and that's one way to buy more time.
Yeah.
So if I'm not working out in the morning, which feels good and just establishes that routine, then I'm waking up at that same time and I'm just grinding at the desk.
Yeah.
And then if I need to pick up time, it's okay. You're rolling your clock back to 4:30. I always said that I never liked to set my alarm clock in the 4s. I always felt like that was for international travel only.
Yeah. Yeah.
So,
yeah.
But here I am. It's not uncommon to set the alarm clock for 4:30, and it takes me some time to defrost. But just kind of getting going. I mean, that's been helpful, and it's just a good reminder. It just kind of helps set your pace, and doesn't let you get too comfortable.
Yeah.
So. No. But again, that is not my personality. That's not typical. That's been an adjustment that I've made. So
I used to get up real early all the time. I still get up pretty early, but sometimes I just like to sleep in.
Oh yeah. No, I was up late last night, and I definitely didn't get enough sleep this morning. But sleep when you die.
Yeah, that's the yeah. It's I feel like my brain works the best early in the morning.
For sure.
I can really, I don't have anyone talking to me.
That's it.
You know what I mean?
That's the reason.
There's no one interjecting.
Yes.
You're not getting text messages.
That's right. Yeah. It's not because we enjoy it. It's just because that's when you get the least amount of distractions.
Yeah.
For sure.
So you ever had any specific failure or setback that kind of taught you a lesson?
Certainly there were some development contingency things that have popped up over the years on all of our development deals, and that just prepares you that much better for the next deal. Again, it's all about reps, and so every time you have the ability to incorporate a lessons learned on the prior development deal, it just makes you that much better and sharper for the next deal.
Yeah.
There's nothing, sort of astronomical that stands out, but I mean, there's been some licks for sure.
Yeah. No, it's you would feel at some point you've seen them all, but there's always something new.
Yeah. I mean, I think, just going through a layoff scenario, I think, during the GFC, I mean, that's something you learn from.
Yeah.
That nothing's guaranteed. No. And it helps you kind of get grounded and realize that, hey, nothing's guaranteed, especially in this business. You got to create opportunity and out hustle. So,
yeah. Is what are you most excited about you're working on right now?
Next year we'll have a portfolio sale, and so that'll be really neat to just kind of see that value creation at the portfolio level, provided we don't sell another building to a user.
Yeah.
Our first 2 round trips were user sales, and that was a great execution. And so again, provided I still think you can call something a portfolio, and it doesn't have to be 1 million square feet.
Right.
Right now, portfolio to me are size based on how much capital,
size of the deal.
Size of the deal. That total dollar amount is how these groups are looking at it, less about, I need to get 1 million square foot portfolio. They're just going to bolt on but they do want to make it efficient and get capital out. So, with these buildings, they're expensive. The rents are big, and you get to a pretty good portfolio with just 3 assets. And so I'm excited about that potential portfolio sale in 26, provided we don't do a refinance or again hold or some other strategy. I mean, we're everything's on the table.
Yeah.
So that's what I'm mostly looking forward to.
Yeah. I mean, that's what like we were saying earlier, we're in that process right now, and it was for us, it was getting to a dollar amount.
Yes.
It was like, hey, let's put all these buildings. It gets us like right below $50 million.
Yes.
That gets all the big boys in.
Absolutely.
And so that's what I'm excited to do that. And it's like I always kind of I feel like I can't ever sell anything. I shouldn't sell these things,
right?
But I'm like, well, I need to get paid.
Well, you've put so much effort into it, and it's just you're emotionally tied to these deals and all the hustle and the heartache, and so I get it.
Yeah,
I get it.
What about a book? Any book you've read or anything like that really changed you?
I wouldn't say that changed me. I don't do a ton of reading. I like to read autobiographies. So, I've read an autobiography about Trammell Crow. It's just interesting to read about all the buildings he developed in Brook Hollow.
Yeah. It's wild.
It's super wild. Yeah. And, I've read a book on Jack Welch, former CEO of GE. And, he just had some different management styles that I thought were super interesting. And so it's, for me, it's maybe less about books, but I'm applying, things that I've learned at the various companies that I've worked for, and applying those to sort of management styles. And that's kind of how I've learned and developed, perspective. So
I never thought about this until Jeff said this. He's like, I was like, man, I don't really read books anymore. He's like, how many contracts we read? We read all day long. It's like leases, contracts, emails.
Yeah. And I don't know how your kids are older.
Yeah.
So we're sort of young kid age, and you just don't have time.
You ain't got time. You ain't got time when they're older too. Like right now, I mean, like they have some event like every night. Now there's times where it's like, oh, they're all gone. Well, see you later. You know, they're driving and all those things.
You might pick up a book at that time.
Yeah. By then, I've already read enough too many contracts that day.
Yeah. So maybe one day I'll have enough downtime to go, read that long book. But not right now.
Well, if you weren't doing real estate, you could have done like what you wanted to do when you were a little kid. What would that have been?
Yeah, so I'd probably be a chef.
Chef?
Yeah, cooking.
That's cool.
Yeah, I mean, not like grilling barbecue cooking, but just like overall kind of, creating meals. Obviously Italian, so, pasta-based type meals.
Yeah.
So yeah, it would definitely be cooking. I mean, I had a passion for it kind of growing up, and mom was a great cook, and so enjoyed that. And, it would have been fun to go to culinary school, or just work in a restaurant. That'd be really neat, but that'd be my alternate career.
You Italians, man. Will's always like cooking stuff over the weekends.
We enjoy
pictures. Mangioli's always like, oh. My mom made this lasagna.
It's the red sauce.
Oh, that's
every mom. Yeah, every Italian mom's got the best red sauce for sure.
Well, so you started off with your party trick, but is there? I like to ask this: is there something about you that most people don't know besides Singapore?
In high school, I was very quiet. I was really quiet throughout, like, elementary school, high school. Some of that was probably related to us moving a lot. And so, I didn't have the same friend group from kindergarten through high school. So I think some of it could have been related to that. I really hit my stride in college. But prior to college, I was just quiet, and SMU brought it out of me. Certainly, being in a fraternity brought it out of me. And I'm so thankful that I got to that point where it was like, hey, you're actually, extroverted, and you love socializing, and you're great with people. And that all kind of came out in college.
Yeah.
But prior to, I was just very quiet.
Yeah.
Yeah.
Yeah. So shy kid. You're probably kind of like, man, I got to read the room like all these different times before I start engaging.
Yes. So. And I'm noticing that that's how one of my kids is, get in there, understand, read the room, and then just kind of figure out. But for me, like one-on-one is great. If I'm in a big group, you kind of see the quietness come out. Yeah. But one-on-one, like engaging over breakfast or lunch or a podcast, I mean, that's what I like.
Yeah.
So, but big group, I'm never going to be outspoken.
Yeah.
So.
Well, man, this is fun. I'm glad we did this.
I love it. Thank you.
I'm glad I wrangled you in.
Yeah. No, can we do another hour?
Yeah. We can. We'll see. It was a lot easier than you thought it was going to be, right?
100%. Yes.
Yeah. No, it's, no, man, it's just, I'm just really happy for you, man. I'm so excited to see you having so much success. And that's great. And just watching each other's, watching your career. It's just fun seeing guys you grew up in the business with evolve and have success. And
I love it.
And so,
and you never know where paths are going to take you. Yeah. So treat everyone with respect, and, you just don't know. I mean, that's kind of how I've been. And, if I would have mistreated you on that leasing tour, I'm sure you're not calling me, inviting me to your podcast. Like, that's just the way the world works, so, be kind and give back, and it's just gonna create a lot of opportunity in the future.
That's right. That's right. Yeah. Well, if you need a building built, you got a tenant in tow, it'd be great for you.
Yeah,
so that'd be great
for sure.
Todd will come down and meet you. And brokers, if you haven't met Todd,
we'll take care of you.
Go meet him.
Yes,
he's an OG Dallas guy.
Definitely,
come get it done.
I love it. Appreciate it.
Well, Todd Marchesani, everybody, man. Thanks, you.
Dude.
See ya.
Appreciate it, Jeremy.